news, and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Anna Edwards in for Francine Lacqua this morning. Let's start with the French political story, shall we? Emmanuel Macron is looking for a new prime minister after the far right and left united in France to push through a no-confidence motion against the government. The French president needs a premier who can pass next year's budget through a deeply divided parliament.
I'm not calling for Emmanuel Macron to resign. I'm saying that there will come a time when, if we don't take the path of respect for the voters and respect for the political forces and respect for the elections, that the pressure on the president will obviously get more intense. But he alone will have the decision, the last word.
A busy time in Paris then. Let's get to my Bloomberg co-anchor, Kriti Gupta, who is in Paris for us, of course. So we heard there from Marine Le Pen saying, I'm not calling for Emmanuel Macron to resign. But what does Macron do next then, Kriti? Clearly he needs a new prime minister.
He does, and Marine Le Pen may not be calling for him to resign, but the far left absolutely is, Anna. They absolutely want that resignation. He is unlikely to do that, however, really pushing until 2027 to perhaps give that seat up. What we do know is that everything changes the next couple of weeks. A caretaker prime minister, Anna, as you pointed out, going to be in play. Potentially Michel Barnier taking back the role. Another potential, a couple of names circling around. Bernard Cazeneuve is going to be the front runner of those names. Others like Jean Castex, also a former prime minister potentially in the running. But I think the big takeaway for a financial audience is, what does this actually mean to the economic budget? And Anna, that's where something very technical gets into play. The loi spéciale, basically the special law in the French constitution that allows the 2024 budget to pull over for the first couple of months of 2025 until Emmanuel Macron can actually form a government that can pass a new budget through. But the impact, the economic impact on the country is really crucial. You're seeing it laid out, the Bloomberg Economics take on your screen right now. The income tax potentially increased on 380,000 households, not to mention other tax bill increases like electricity for another 18 million households. The good news, though, Anna, is that this could actually mean more austerity for the French economy, potentially close the budget down a little bit lower to about 4.8% of GDP. That is even better than Michel Barnier's 5%. But the problem, the downside, is if you do that, and you pointed this out, Bernstein called for it as well, that maybe, just maybe, that means weak growth, weak wages, and ultimately less tax revenue for the French government. So this could really impede France's trajectory.
Yes, so if this means more austerity, it would be one way to describe it then, Kriti. Does that go some way to explaining why some markets are quite relaxed this morning, even retracing some of the moves earlier on this week? For example, looking at spreads.
Well, we know that yield premium between the French debt and the German debt, the real reason it widened so aggressively was because France, and for 7 years, by the way, has been on an unsustainable debt path, similar to that of the United States, similar to that of the United Kingdom as well, but by a much larger margin than their German counterparts. This potential austerity, although negative for growth, as I just pointed out, could put that into a little bit of a U-turn. So from a fundamental kind of bond trading basis, that may be one reason for that spread to close. But Anna, you pointed this out as well. It is still at very elevated levels. And the conversation I'm hearing here is that it could still get to 100, 125, cross that Italian premium as well. But it'll do so slowly and steadily, and there won't be a shock to the system. And I think that's what everyone kind of has a close memory about, because it did shock the system just 6 short months ago.
Kriti, thank you very much. Kriti Gupta in Paris with analysis of what's happening in French politics and what that means for markets. Let's broaden the conversation and think about where this takes us next. I'm joined now in studio by Claudio Irigoyen, who is Bank of America's Head of Global Economics Research. Claudio, really nice to speak to you. Thank you very much for coming in. So let's think about the wider implications of what we're seeing in France. How does this affect your appetite for French assets of all varieties at this point?
Well, definitely, uncertainty doesn't help. We think that when you put the political uncertainty in France, in Germany, with the market trying to figure out the final policy mix of Trumponomics 2.0, definitely it's a time to be cautious, and the option value of waiting is very high. There is no need to be brave and to take a stance yet. because political uncertainty is very difficult to figure out.
Yeah, OK, and we'll come to some of your thoughts around the year ahead and what it means for the United States. Focusing in on Europe then, I suppose Trump policy hangs over Europe, and your assessment of the desirability of European assets at this point?
I think at this point, Europe could be the weakest link. When you think about the US, China, and Europe, ironically, Europe is the weakest link. In the case of Trump policies, the way we think about it from the perspective of Europe is that Trump will negotiate country-specific comprehensive packages that will involve trade, immigration, defense, energy. Obviously, the negotiations with Europe will be completely different from the negotiations with Mexico or Canada or China. But definitely, Trump policies are going to be more of a negative shock for the rest of the world, and Europe in particular, than for the US.
OK, and is it, I mean, so that's one of the negatives around Europe. I suppose the other negative is the growth picture at the moment as it stands, even absent any extra tariffs from a Trump administration.
Correct.
So, for example, the German struggles to find new energy sources and to make up for the fact that the Chinese consumer isn't consuming so much anymore. That weighs on France as well. I mean, what do you see that can be done to boost the growth story for Europe at this point?
It's going to be difficult because the way we characterize the year is a year of policy uncertainty and divergence in terms of growth, in terms of inflation dynamics, and in terms of policy. So different from China, that they have still room to do fiscal policy if they need to face the tariff shock. There is no room for fiscal policy in Europe. So to be honest, the ECB is not going to save Europe. They can cut interest rates to 1.5% terminal rate, which is what we think. But the shock absorber will have to be the currency.
OK, and so how weak does the currency get then in that situation? I mean, we're at 105 or so right now. I've definitely seen more research popping into my inbox talking about parity. Others saying, actually, parity is just a nice story, but it doesn't necessarily, we're not going to get there. What's your thinking, at least around the economics that goes into that euro dollar?
I think it's a story not only of the euro, it's a story of what will happen to the dollar in general. And ironically, for Europe, it's important the policy response of China to the tariffs that Trump will most likely impose on China. If China does a lot of fiscal policy, that's good for Europe. I mean, let's not forget, the structural story in Europe is, at the risk of simplifying, Europe is a story of, or a model of buying cheap energy from Russia and sell manufacturing goods to the US and China. There is no more cheap energy. You need to find alternative sources, and China is not buying so much manufacturing goods. Actually, China is selling manufacturing goods, in particular cars, to Europe. The market share of Chinese electric vehicles in Europe went from 0 to 15% in 3 years.
Yeah.
It's for Germany, it's not good news.
It's not good news, certainly for the auto sector. You're the second guest I've spoken to this morning that's talked about the impulse fiscally in China as being something really important under a Trump administration that might shape Europe next year. We'll return to these themes in a moment. Claudio Irigoyen, Bank of America's head of global economics research, stays with us on the programme. Coming up, we'll get an update on what's happening with cryptocurrencies. Bitcoin tops $100,000 for the first time as the crypto market jumps by more than $1 trillion since Donald Trump's election victory. That is next. This is Bloomberg.
People use Bitcoin as a speculative asset, right? It's like gold. It's just like gold, only it's virtual, it's digital. People are not using it as a form of payment or as a store of value. It's highly volatile. It's not a competitor for the dollar. It's really a competitor for gold.
That was Fed Chair Jay Powell speaking at the New York Times Dealbook Summit, talking about crypto. Bitcoin has surged past $100,000 for the first time, lifted by Donald Trump's pro-crypto choice of Paul Atkins to lead the U.S. SEC. Let's discuss with Bloomberg's senior editor for digital finance, Ana Herrera, who's here on set with us. So let's think about the milestone that we've reached, $100,000 and above now. What does that really mean in crypto circles then, Anna?
I mean, they're very jubilant, I have to say, especially after the period they've had. You know, 2022 was a big crash. There were big scandals with people going to jail. So the idea that it's recovered is quite surprising yet again. It's had this histories of up and down, but now 100,000 it is a very big milestone. And I think people are watching to see if these changes will happen in the U.S., and that could propel it even further and bring bigger investors in, and maybe even banks to start talking about it or putting money in it.
Yes. I mean, how significant is this that Paul Atkins, the nomination for chair of the SEC, the Securities and Exchange Commission, a body that under Gensler was really tough on crypto, went after crypto with plenty of enforcement activity, which seemed to be the thing that they also objected to. So what kind of change of regime will Paul Atkins bring about?
I think people are expecting a very big change. The idea that you don't have someone cracking down on them would be, or that you can have an open dialogue, I think that would be a very big difference. You know, as you said, Gensler and his SEC were cracking down on the sector. There were crashes, so that sort of also attracted the attention, I guess. But the idea that you have someone who might, you know, make it easier for bigger players to come in, that's a big difference, and I think they're waiting because it could be a sign that the industry would propel its growth further.
Anna, thank you. Bloomberg's Ana Herrera with the latest on the cryptocurrency. Still with us, Claudio Irigoyen, who is the head of Bank of America's head of global economics research. Claudio, we started this part of the programme hearing from Jerome Powell, his views on crypto. At the same time, or during the same conversation, he was talking about the US economy being in remarkably good shape. And that takes us nicely into your thinking for 2025 and US exceptionalism. Will it be another year of outperformance for the United States?
Yeah, definitely. We have a narrow consensus call on the U.S. We are more constructive than consensus. We think the economy will grow 2.4%, 2.5%. We think potential growth in the U.S. is higher than pre-pandemic, which is very important because that has implications for what people call R-star, the natural rate of interest. We think the Fed will cut interest rates in December and two more times in the first half of next year. And the whole story of the U.S. is that the private sector has very healthy balance sheets. When interest rates collapsed in the U.S. During the pandemic, houses and corporates rushed to refinance their debt, and they hedged against increasing interest rates. There was a huge run-up in financial assets, and that is the cornerstone or the driver of the resilience of consumption. The 2024 story was, the surprise was, it's amazing how resilient consumption was.
OK, yeah, real resilience in consumption. And I wonder whether you mentioned a couple of rate cuts, well, one in this month, perhaps, from the Fed, and then a couple in 2025, Claudio, as being your assumption for the Fed. Is there risk that we don't, well, what is the risk that we don't get those? Because if the US economy continues to be as strong as it is proving to be, is the risk that we don't get those cuts next year? Absolutely,
absolutely. So we need to wait, and also the Fed needs to wait and see what is the final policy mix for Trumponomics 2.0 in terms of deregulation, immigration, fiscal policy, very, very important, the tax cuts, and where the deficit is going to be higher or not, and trade policy. Those things will impact on inflation, will impact on growth, will impact on uncertainty, and definitely the Fed might find 3 months from now that the optimal policy is to stay on hold. Is it too early then to say how inflationary Trump's policies will be? Because that's in the run-up to the election. There seems to be a lot of concern about that. We saw yields going higher in bond markets and a lot of expectation that, in particular, tariff policies would lead to more inflation. What is the latest thinking, do you think, on how much a Trump administration adds to inflation through its policy choices, whether it's tariffs or immigration policy? Yeah, I think, as you mentioned, people are focused on tariffs, but I would say that fiscal policy is a very, very important driver of inflation. If we're talking about tax cuts financed with debt, that will be the major driver. In terms of tariffs, we don't have to forget that most likely the dollar will appreciate and will mitigate the impact on inflation. Tariffs can give you, depending on how much and how upfront, 20, 30, 40, 50 basis points of increase inflation, but the important thing is that it's going to be a temporary increase in inflation, not a permanent. Fiscal policy is a different story. That's a more persistent driver of inflation.
Yeah, and you say in your notes that in emerging markets there are going to be winners and losers. The currency markets, of course, have been coping with a lot of dollar strength already. I mean, and the tariff story is developing. Mexico certainly had a lot of mentions. China, a lot of mentions in the emerging market space. What else will dictate which of these emerging markets do well?
I would say that the world has changed. Geopolitics is driving everything. National security is the password to open or close your countries to trade in goods and assets. And the way companies think now is not so much in terms of efficiency. I produce where in the country that is cheaper to produce. It's more in terms of risk management. I produce where it's safer to produce. So there will be some relocation of supply chains towards friendly, geopolitically friendly countries, even though it might be more costly. But companies don't want to be caught with the geopolitical shock or the pandemic or whatever, whose critical inputs depend on countries that might not be there when you need them the most.
Claudio, thank you very much for joining us. Good to speak to you this morning. Claudio Irigoyen, Bank of America's head of global economics research. It is just coming up to 9:20 here in London. Coming up, South Korean President Yoon Suk-yeol is set to face an impeachment vote as early as Saturday over his shock declaration of martial law. Will his own party vote to impeach him or to protect him? We'll bring you the latest next. This is Bloomberg. Welcome back to The Pulse. I'm Anna Edwards in for Francine Lacqua. Now, the South Korean President Yoon Suk-yeol is reportedly set to face an impeachment vote on Saturday after the fallout from his martial law debacle. The leader of South Korea's opposition Democratic Party, Lee Jae-myung, told Bloomberg that his party will continue to push for the ousting of President Yoon, even if he survives the initial impeachment vote. The ruling party has said it will prevent the motion from passing. For more on this, let's bring in Bloomberg's Katia Dmitrieva. Katia, talk us through all the thinking around whether the president will or will not survive any vote over the weekend around impeachment.
Well, it's certainly an open question and getting kind of messier and more complicated by the hour in South Korea. There's the opposition lawmakers who, as you said, have declared that they're calling for an impeachment probably Saturday. It's looking like Saturday night, most likely, so in the next 48 hours, give or take. But the head of Yoon's own party has stated that they're not going to be looking to impeach. Yoon. We had several members coming forward and saying they will vote against any impeachment proceedings. Now, the opposition coalition, which includes the Democratic Party there, as well as a few other smaller groups, they are looking to impeach the president because they say he simply broke the law and he went against the Constitution. But they're going to need at least 2/3 of all the government's members to vote in favor of impeachment. They have about just over 190. They stand at 192. So that means they're going to need 8 members of Yoon's own party to essentially vote in favor of impeaching Yoon, which is now an open question whether or not that will happen. At the same time, we had the finance ministry speaking to one of our reporters saying that they're aiming to boost overnight liquidity in the won. So as you can see, this is still having ramifications in markets, whether it's the Kospi and stocks sliding earlier on this news, as well as the won. So there's still, like, amid this uncertainty in politics, of course, it's going to have this effect on markets.
OK, Katia, thank you. Asia economics reporter Katia Dmitrieva. Coming up, we'll get back to the French story. The French government plunging deeper into crisis. We take a look at how markets are reacting to the turmoil. Moody's saying that the no confidence vote is a credit negative. We'll get more on that shortly. This is Bloomberg. This is The Pulse. I'm Anna Edwards in London, in for Francine Lacqua this morning. Let's get to our headlines. France's political crisis deepens as the government is toppled. Moody's says the no-confidence vote is credit negative and increases the country's fiscal challenges. Bitcoin smashes through $100 for the first time after Donald Trump's pick to head the SEC boosts crypto markets. Plus, South Korea's main opposition leader tells Bloomberg that ousting the president will be difficult after a failed bid to impose martial law. Welcome to the programme, everybody. It is just coming up to 9:30 here in London, so an hour and a half into our European trading day, and this is the picture across French assets. We have the CAC 40 actually making gains this morning, a sense of perhaps knowing where we've come to, at least in the very short term, even if the path ahead looks very uncertain. We at least have resolution on whether the budget that was in question is going to pass, and no, it didn't seem it would, and the government has been brought down. We also have to focus on what's going on with the currency. Not a great deal of movement in the euro. It had weakened in recent days in the run-up to the vote, but not a great deal of weakening right now. In terms of the bond spread, we'd actually seen that the bond spread was coming down a little bit in the earlier part of trade. Now we're pretty flat. Perhaps it has to do with those lines coming through from Moody's just in the last few minutes that the French no-confidence vote deepens the fiscal challenges and that it is a credit negative. We will watch to see how all of that develops. Let's get more on the political crisis in France. We're joined now by Georgina Wright, Senior Fellow and Deputy Director for International Studies at the Institut Montaigne. Very nice to speak to you, Georgina. Nice to have you with us. So let's go through then what we know and what we don't know about where things head to from here. Paint a picture of what you think the most likely outcome is. I suppose that the biggest question is Macron needs to pick a new prime minister. What is that going to look like?
Well, it's going to look very messy, I think, is the honest answer. We saw, we had legislative elections or parliamentary elections in July, and we saw just how difficult it was for Macron to pick a prime minister. And he chose someone, Michel Barnier, who sort of most people in Europe knew because of his role as Brexit negotiator. But actually, people in France, some people knew him, remembered him as minister, but most people actually had forgotten him. But he came from sort of the centre-right party, which definitely did not have the majority in Parliament. So he sort of put together a government, but pretty much from the beginning, the Parliament said, we don't have confidence in this government. It's not representative of the legislative elections. It's not loyal to the outcome of the elections, and it's not fair to voters. So sort of everyone in France knew that this government could be very short-lived. So what does Macron have to do? He has to pick a new prime minister, hope that Parliament will back that prime minister, and before the end of the year, adopt a budget, because that's the most important thing to avoid.
So in terms of adopting that budget, I mean, we saw in the latter stages of the budget negotiations that we've just experienced, we saw Barnier making a few concessions to Le Pen, to the left, to the various factions within the National Assembly. Is it going to be, once again, all about that? Is it possible to craft a budget that Le Pen and the left will go for? Or are they just minded to not back any budget because that suits their political ambitions?
Well, at the moment, it seems they weren't minded to back a budget if it were presented by a government that, wasn't their sort of government. And this is the big sort of ask from the left and the far right. They say, we're the big winners of the election. Why is it that we have a government that isn't, representative of us, of our voters? And so, in a way, if you listen to Marine Le Pen and the left, they said, OK, Michel Barnier made concessions, but he didn't go far enough. And that's why we simply cannot support this budget. But there is a real question about France needs a budget before the end of the year. Now, there are a number of provisions that would allow a caretaker government, so Barnier's government, or a new government to kind of basically renew the current government. But that means no changes to taxes, no changes to spending. And we know that that's what France needs to do because its debt is sort of very high at the moment.
Yes, so if they rely on this loi spéciale, there's been a lot of talk about how that actually dials up the austerity. So in a sense, we could end up in a situation where parties that had wanted to stand in the way of this belt tightening, they wanted to stand in the way of the austerity that they thought Michel Barnier was trying to bring in, and we might end up in a situation where more austerity is achieved. Is that the likely path here?
I mean, it depends on the new government and what they propose and what they can get through Parliament, because this is the key, right? You sort of can craft a budget. It can be as ambitious as you want. It can go sort of full, hardcore cutting spending, or you could, think, well, actually, we'll take on more debt. But that government, that new government, will need to get the budget through Parliament, and Parliament is extremely fractured. We have, no sort of clear majority, really. The left-wing coalition says, well, we should really have a prime minister. We were the big winners. You've got the far right who say, actually, as a single party, we came out as the first winners. So it's going to be very, very difficult. But, there are measures in place, as you said, to make sure that there is a budget at the the beginning of next year and to avoid a shutdown.
So Michel Barnier was the choice of Macron, and Macron gets to appoint the next Prime Minister. Is there any sense that he picks anybody who is different from what he's done before? I mean, he's not going to pick someone from the National Rally, I assume, or from the far left, or is he? Would that be something that has any precedent in French politics? Because, I mean, Macron is from the centre. Would he really want to appoint somebody from one of those more extremes? And there's always been talk of this cordon sanitaire in French politics that stops too much power falling into the hands of the far right. Does that still stand?
I mean, I think Macron's got until 2027, right, and he really wants to have a Prime Minister who he can work with and pass ambitious reform, because that's what he promised during his election campaign for a second mandate. But, you know, it's not ultimately only about what he wants. There is a provision in the Constitution that says that the President should appoint a Prime Minister from the largest faction in Parliament. So Macron might have to work with a Prime Minister from a party he's not that closely allied to.
Not necessarily party, so it could be someone from the left?
It could be someone from the left, it could be someone from the far right, or he could try again to have sort of a centrist, but someone who might be able to kind of coalesce the centre-left and the centre-right, which Barnier's government hasn't always been able to do so far, although it was very short-lived. So, you know, we could have a crystal ball and sort of imagine what would happen. But I think Macron is under deep pressure now to find someone who can muster enough support in Parliament to get through very tricky laws, because we're talking about the budget and finances, but we're also talking about immigration and a whole host of other issues that France has promised.
I still come back to the idea of whether it is actually the content of the budget or it's just the, you know, the motivations of the main characters involved. I'm thinking here in particular of Marine Le Pen, who faces legal challenges of her own. And a lot of the thinking ahead of this had been that she wants to go after the presidency in 2027. She needs to present her party as something fairly grown up and less out there at the political extremes, and then she stands more chances in 2027, which might lead you to a more moderate position. But if she feels that her political future is in question because of the way that the legal story is playing out for her, maybe she then is motivated to be more radical and to stand in the way of bringing in a Prime Minister and a budget. I mean, what sense do we have of her motivations?
Well, we know Marine Le Pen wants to be president. She's made that abundantly clear, and she's got into the final round, you know, several times. So this is not news. Of course, she does have a legal challenge, and depending on the outcome of that, that will sort of make, you know, it will either decide that she can run again or she can't run again. But you're absolutely right that the Rassemblement National wants to present itself as a credible force. And in many ways, in the minds of many French people, they are the opposition right now. So that is something that they're trying to do. They're trying to say, as you say, look professional. You know, on that first day of Parliament, there they were, all with their suits, etc., showing that they can be a credible force. You know, how radical they will be, or how they will play the next couple of months, next couple of years until 2027 is everyone's guess. Because, as you said, they still have core voters who expect a number of things from them. So sort of how centre they can go really depends on how they think that this will impact their 2027 prospects.
OK, thank you so much for joining us. Really good to talk it through. Georgina Wright, Senior Fellow and Deputy Director for International Studies at the Institut Montaigne, joining us here on set in London to talk about French politics. 9:37 here, 10:37 if you are in Paris, incidentally. Staying with news out of France, Amundi is said to be interested in acquiring control of Allianz's asset manager, that's the Allianz Global Investors business, as the French company Amundi scouts for deals amid industry consolidation. Joining us now is Bloomberg's Leo Ken-Sherpa with details of what we're looking at here. So, Leo, walk us through then the details of what's being discussed between these two businesses. What are the top lines?
Yes, good morning, Anna. So Amundi and Allianz have been holding on-off talks for the past couple of months, really, and there's two options on the table. One is Allianz basically, Amundi making a full-on acquisition or buying a majority stake in Allianz Global Investors. And to me, at the moment, this feels much more feasible, mainly because insurers generally like their asset management businesses. You know, it helps them. It basically means lower fees for them. And it also helps them invest their premiums more efficiently. And separately though, there's also talks between Amundi and Deutsche Bank about the potential combination of its asset management arm with DWS, the asset management arm of Deutsche Bank. And that's another option that's on the table. And we might get an update from Allianz Global Investors when they report results in February.
OK, so there's a lot of things in play then here, Leo. So it's about scale. It's about scale, but why is it happening now? What's sort of driving these businesses to have these conversations at this point?
Exactly. So basically, across this is a global issue, really. Traditional active asset managers face, rising costs, pressure on fees, and in Europe in particular. And I had a senior executive in the industry tell me the other day, basically 10 years ago, we thought 1 trillion is what we need. And now it's more like 3 trillion. And, Amundi doesn't even manage 3 trillion. So this is really a play for scale. And it's happening now in Europe in particular, because you had the biggest deal this year was BNP buying AXA Investment Managers, and this was triggered by a sort of regulatory quirk, which is called the Danish Compromise, and this dates back to the Danish presidency of the European Union, and they basically allows banks with an insurance arm to buy asset managers without taking a hit on capital, or without taking a big hit on capital. And this is another driver that's really triggering this M&A situation here.
OK, so that's the driver. That's why these conversations are happening now. And there does seem to be quite a lot of deal-making either happening or being talked about within the European asset management industry. Leo, something that you know a lot about, of course. So what else are you watching for? Exactly.
So just over the past few weeks, news broke basically that Generali, another major insurer, of course, in Italy, is in talks with Natixis Investment Management about a potential combination or joint venture. And another situation I'm watching is Banco BPM launching a bid for an asset manager called Anima. And that bid, to make matters more complicated, got disrupted when UniCredit a few weeks ago launched a bid for Banco BPM. So there's plenty of situations playing out at the moment.
Leo, thank you. Thanks so much for the update. Bloomberg's Leo Ken-Sherpa with the latest on these asset managements and the rush for scale. Coming up on the programme, with South Korea's president set to face an impeachment motion, the opposition leader tells Bloomberg his party will continue to seek Yoon's removal, even if he survives an initial vote. Our interview with the leader of South Korea's Democratic Party is next. This is Bloomberg.
It's Jobs Day, and Bloomberg has the report under surveillance.
Who do you think holds the leverage right now? Employers or employees?
It's more balanced than we've ever seen.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
The labour market weakness we saw in the summer was a head fake.
What raises this question, basically, has the narrative been set?
We are still in the throes of a strong labour market.
The November Jobs Report, Friday on Bloomberg.
Welcome back to The Pulse. I'm Anna Edwards in for Francine Lacroix. Now, Brian Thompson, the CEO of United Health Group, has been fatally shot in Midtown Manhattan in what authorities described as a targeted attack, igniting a manhunt across the city for the gunman. Early reports suggest the alleged attacker was waiting for Thompson upon his arrival at a hotel for the company's Investor Day. The attacker approached the executive from behind and shot him multiple times before his gun malfunctioned. President-elect Donald Trump has chosen Gail Slater to head up antitrust enforcement at the U.S. Justice Department. Oxford-educated Slater was a tech policy advisor on the National Economic Council during Trump's first term. She's seen as a pro-enforcement populist Republican, particularly when it comes to the tech sector. South Korea's main opposition leader says it might be difficult to garner enough support from the ruling party to impeach President Yoon this week over his declaration of martial law. Lee Jae-myung talks to Bloomberg's Sherry Ahn about the state of flux in the country ahead of the impeachment, which is due over the next few days.
정치는 결국 궁극적으로 국민이 하게 되는데
Ultimately, politics is done by the people. And even if the result of the vote may go against the will of the people in the current situation, the vote result may change next time if individual members of the parliament are pressured heavily by public opinion. That's what I think.
The martial law declaration really caught international partners by surprise, especially key allies like the United States. How are you going to restore confidence in the relationship with South Korea?
아마 전 세계에서
It is probably a very confusing situation for the rest of the world to see South Korea. Something that couldn't have happened has happened. But it's not a common situation in South Korea, and it's a problem caused by the very special character of a certain individual named Yoon Suk-yeol. It can be seen as a situation where disease penetrated into a healthy, living thing called Korea. Usually, the president mobilizes the military and the police to attempt to destroy the constitutional order and strengthen his power through a de facto coup. But this was thwarted by the people and the National Assembly within a few hours, wasn't it? This shows the healthy state and the true power of Korea. This person, Yoon Suk-yeol, is just a special, exceptional, and temporary phenomenon.
We have seen Japan also play an active role in the trilateral alliance with South Korea and the United States when it comes to pushing back against not only North Korea, but also against China. What will the relationship with Seoul look like under an administration that's led by you?
대한민국은
Korea is a peninsula located between continental powers and maritime powers. In fact, it could be very diplomatically and internationally vulnerable. But on the other hand, it has opportunities at the same time. We cannot continue to be hostile in our relationship with Japan.
The so-called Korea discount has been in place for a long time, even before the Yoon Suk-yeol administration. How do you plan to overcome that, especially when it comes to issues like short-selling bans?
윤석열 대통령 이전에 있었던 코리아 디스카운트는
The Korea discount that existed before President Yoon Suk-yeol was caused by the division of the country and military confrontation. And there was also the abuse of corporate management control system and stock price manipulation. So, we need to improve these things institutionally. The special problems that have risen in the Yoon Suk-yeol administration, the escalation of geopolitical risk, absence of economic and industrial policies. These things will be resolved when the administration ends and the risks that existed before that will be institutionally improved. Short selling is a necessary system. We need to allow it reasonably and fairly within the necessary boundary to make sure that it is not abused. We need it for the benefit of MSCI.
The leader of South Korea's opposition Democratic Party trying to cast the president there as an outlier in an otherwise democratic national story. Coming up on the programme, we'll get back to Europe and its economy. ECB President Christine Lagarde tells European lawmakers the fight against inflation is approaching its end, but hasn't yet been won. We will discuss her comments next. This is Bloomberg. Welcome back to The Pulse, everybody. Now, the ECB President, Christine Lagarde, says the bank's fight against inflation is approaching its end, but has not been won yet. She also warned that the economy is likely to remain fragile in the near term.
Survey-based data suggests that growth will be weaker in the short term on the back of slowing growth in the services sector and a continued contraction in manufacturing. Further ahead, the euro area's economic recovery should start to gather some steam. Consumer spending is expected to pick up as real incomes rise, and investment is expected to recover as the impact of past monetary policy begins fading.
Lagarde appeared before European lawmakers ahead of the ECB's next rate decision, 1 week, in fact, from today. For more, we are joined by Zoe Schneeveis, who leads our economics coverage for Europe from Frankfurt. And Zoe, so we've listened to Lagarde there. What are you expecting from the ECB's rate decision next week? She was talking yesterday, but other ECB voices also talking yesterday, sort of moderating our expectations around the size of any rate cut, perhaps.
Exactly. Lagarde was quite tight-lipped on what exactly will be happening next Thursday, so just a week away. Other policymakers have been more outspoken, and everyone seems quite clear that there will be a 25 basis point cut a week from today. That would be the fourth in this cycle. There had been sort of some market speculation, might they go 50, but that speculation has now faded again. And what's quite currently, it's like 90% of markets bet that it's going to be a 25 basis point cut. The reason for that is that the outlook is quite opaque, and they just don't want to get ahead of themselves.
Right, so they don't want to get ahead of themselves. The outlook is opaque, but they still have to present these new forecasts, don't they? So however opaque the outlook, they don't have a growth mandate. They've got an inflation mandate, but a lot of people will be focused on how dire a picture they choose to paint of the Eurozone economy.
Exactly. Lagarde yesterday, and you played those clips just now, did say that things were not going very well, but that eventually there'll be an uptick again. The issue is here, the two biggest economies, Germany and France, both are in political turmoil. And that political turmoil does mean that there is less investment in the region, which then does mean that there is less growth. The ECB has been betting for ages that there's going to be recovery thanks to consumers. That consumer-led recovery hasn't really happened. It's happened in the southern countries, but not in the north. So let's see what those numbers come out, that we get next week.
OK, Zoe, thank you very much. Bloomberg's Zoe Schneeweiss in Frankfurt. No doubt a lot of focus on the weakness in the German economy and in the weakness in the French economy that many people are expecting to intensify if we see a real austerity budget coming in by force in France. Quick check on some French assets. French stocks kind of performing within the mix, not too divergent from the average of the stock 600 today. So not a huge amount of news there. We actually see a moderation in the yields in France and in spreads, which is interesting given the risks that perhaps still lie ahead. More coming up in the brief. This is Bloomberg.